The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Yeah, there's a lot of chaos and confusion right now, and here to give us some insights into the crypto markets is Sylvia Jablonski. She is CEO, CIO, and co-founder of Defiance ETFs. They're sponsors of ETFs and registered investment advisors. Welcome, Sylvia.
Good morning. Thank you for having me.
Thank you for being here, especially on a day like today where we're trading, Bitcoin's trading below 22,000. As I mentioned at the start, we're seeing this sort of fear that was induced potentially by this sell-off in Bed Bath & Beyond, but also we're seeing some negative movement in the crypto miners as well. Hey, can you give us a little bit of insight and light the way for us here and what's going on in the markets?
Yeah, sure. I'll certainly give it a try. I think it's, it's an unhappy way to start a Friday going into a weekend in the summer, that's for sure. But it's also been a little bit typical of what we see happening in late August and starts to falls and things like that. So I think if you look at it's super interesting. If you look at equities and particularly NASDAQ, and then the top holders of the S&P 500, which are also more or less tech names, and compare it to the correlation of Bitcoin and Ether and some of the other cryptocurrencies over time in recent months, and really in the last year or so, the correlation has been notably higher than ever, essentially. So I make that point because I think that what happens in equity markets then bleeds down lately to crypto markets. So in the last couple of the days, first we saw Fed Chair Powell come out and the market reacted positively to that, and crypto actually reacted positively to that too. It felt like, maybe rates would be a little bit slower and perhaps not as many, and the whole market sort of felt good and the rally kept going on. But then over the last 2 days, there's been this, very sort of loud voicing of opinions amongst voting and non-voting Fed members about inflation, and that we're sort of nowhere near 2%, that they have to keep going, and that recent, weak economic data is not going to really change things. And a lot of that data came out yesterday. Now you see futures in tech stocks and broad-based equities, softer going into the open. And my theory on this is that investors that buy those stocks, they buy sort of the high quality growth stocks, are also investors that start looking at, sort of the smaller cap growth stocks, the hyper growth stocks, and even crypto. The crypto is now on that list, right, of kind of thoughtful, innovative, disruptive technologies of the future, and it's viewed as sort of high risk by the average retail trader, I would say. So what happens is they get this bad news, they sort of take it in, and lo and behold, the price of Bitcoin falls. The weird thing about this, though, is that it looks like it happened rather quickly, so it's hard to figure out, like all of that news was just absorbed in that minute that we saw, the price fall. It's a little bit difficult to call that, but that's the overall sentiment I have on it.
Right, which is kind of why I brought up the whole Bed Bath & Beyond thing, because it seemed, if anything, almost tied to that there was this sort of trigger that did it. But it seemed that the Fed's, the remarks that we saw in the Fed's minutes earlier this week indicated that the Fed at least would try to take action to curb inflation, but that they wouldn't get too ahead of themselves is kind of what it seems like they were trying to say here. Do you think, though, that is the market really that afraid? What are they afraid of? Are they more afraid of the Fed not being able to control inflation, or are they afraid of the market being too in control of inflation and potentially throwing cold water in the whole economy? What's the real fear?
Yeah, I think that, when I talk to a lot of our clients and different investors and traders, it seems like people are just very much afraid that the Fed is going to do too much too fast and, bring the economy to a screeching halt. My take on this, though, is that the Fed needs to do more work to bring down inflation. I think, a lot of kind of market experts would agree on that. The price of food, the price of rent, the things that really sort of matter are just sort of too high. and have to come down, right? But I also think that the market can absorb this, right? I mean, if you look at the last quarter's earnings, for example, operating margins tell me that some of the most stable large quality companies in the U.S. market and even globally, they have been able to absorb inflation. It does impact their bottom line at some point if the Fed keeps rate hiking, of course, but I don't think that we're there yet. And I think that when you have these outrageously strong job numbers, you have consumer spending, it shifted from goods to services. So you are kind of seeing this negative news now that feels like it's, kind of paralyzing the market. Like, oh no, the data is getting a little bit weaker. Look at the, retail's kind of falling off. It's not really falling off. It's an inventory supply issue. Spending has gone to airlines. So I think that we're in pretty good shape economically. I think that, again, I think the jobs data just tells me that if we have a recession, it's not going to be as bad as we think. It might be a minor, blip on the radar. And, things are really okay for corporate America at the moment. So the fears are a little bit overblown, in my opinion.
All right. But this is Amit out here. 24 hours back, you kind of indicated that you are in the wait and watch camp, at least till September, because we expect more action from the Fed then. But in the last 24 hours, and you kind of touched upon this because you said that, well, it's happened in such a short time because the crypto market has fallen above 9% or so, particularly Bitcoin we're talking about. So if you had to come up with a theory, what will it be specifically? That what happened in the last 24 hours?
Yeah, I think, well, what happened specifically in the last 24 hours is that a lot of, rhetoric and dialogue and kind of summary and analysis came out from voting and non-voting Fed members. And that's really what I think has hit the market. On Wednesday, the data, as you kind of alluded to before, seemed okay, like that, Fed isn't going to overdo it. It might be per Fairchild Powell, okay to pause. But then, the follow-up on that from, Bullard and Daly and some of the other Fed chairs, it felt a little bit, it felt a lot stronger and more hawkish. And if anything, if you look at the market wagers, the odds of the rate hikes being higher and lasting longer just also went up in the last 24 hours. So I really do think it's that number. Nothing else nothing meaningful has happened in the market between now and then. You could always say, like, there's always this backdrop where it's the end of August, liquidity is low, traders are kind of like off the bench and whatnot. So it's always like a tricky time to trade now in the short term. But I think on these pullbacks, if you're a long-term investor, whether it's in Bitcoin, whether it's in, various cryptocurrencies, equities, I mean, these are great little opportunities to buy for the future too. So you can, definitely look at this in a positive way as well.
Yeah, you talked about positivity, but there was this positive talk or optimism around ETH merge. Does it stand any chance when these macroeconomic factors just come into play? And do these macroeconomic factors just push aside merge optimism?
I think that the economic factors are definitely kind of, raining on the parade, right? And I think they're keeping a lot of investors on the sideline. But what always happens, or what has historically happened anyway in these situations, whether it's, again, like on the crypto side around the merge or any positive news coming out, or whether it's on the equity side and earnings or, stock splits for major organizations, whatever it might be, I do think that there's this sense of FOMO that kicks in when people start to realize, wait a minute, the markets have been actually pretty stable. They've pulled back a little bit, but we're well off of June highs at this point. The macro picture, sure, there are some potential headwinds, but overall, there's enough strength in the economy where if you're an investor looking for the, long-term, a year from now, 2 years from now, I mean, it's definitely reasonable to buy these various asset classes on the dip and just, don't allocate your entire portfolio to it, but, perhaps take that view if it's something you're interested in when it's at 21,000 versus when it's back at 60,000 or, 17 versus 3.
It'll be a while before we get to 60,000 again, it seems. But your portfolio, your portfolio is positioned nonetheless, kind of for that, right? You have the likes of the miners like Marathon Digital. You have Coinbase. You have Robinhood. These are stocks in your ETFs that are definitely ways to get long crypto. But in the short term or in the intermediate term, what of those are you saying, look, this is going to be rough. holding them, and it's going to get worse before it gets better. With your crypto stock holdings, which ones are you worried about?
Yeah, and that's a fair point. When I think about there's sort of two types of types of people that we tend to cater to, right? You have traders that are looking for short-term opportunities, and so when you have Bitcoin pull back, and then all of these Bitcoin-related names, some of the ones you just mentioned, for example, it could be Coinbase or Robinhood, it could be Riot, it could be even some of the NFT-related companies, whatever it is. When they pull back, maybe you get like a short little jump in the next couple of days when you get an oversold condition. But for longer term traders, these are the times that it's good to scoop up this access. So what I'm worried about, the broad-based names, Coinbase, for example, Robinhood, they definitely have major issues, right? Earnings were quite sour. They're going to experience massive layoffs. There's this fear of the crypto winter. So I think in the short term, investors should expect a lot of volatility and not great performance out of these names. I think that this is, again, a long-term story. So, and I think that's it's good to note for your viewers, and they probably know a lot of this, but there are also ways to hedge these positions too, right? Like if you have a lot of crypto, you've kind of scooped it up and you're worried about these falls, you could look at some of the inverse funds, for example, to hedge out and reduce some of the risk in the short term of these kind of falling back.